Okay, this is a quick video, hopefully quick. Today is April 13th. It's in the evening. It doesn't matter what time it is, but it's about 7. It's 8 o'clock. Uh, and what I was going to do is I am going to do a calculation from, some debt clock data. And I was just noticing this debt clock. It's got a lot of data on it now, and it might be accurate. I don't know. Uh, it's coming. It's coming from the government, I guess. So you can see the numbers clicking off really fast here. But I'm going to focus in on this one right here, and let's just go ahead and take a screenshot of what that is. And then I'm going to do some calculations from it. So I can make that a little bigger. I guess that's as big as we get. The year over year increase in the US M2 money supply divided by the yearly world production in gold. And of course, right now, there's not a lot of gold coming out of the uh, ground, but more or less, this number is kind of a measure, as you'll see, of how fast they're printing money. It's really ramped up, um, and I think everybody knows that. But this is just like a visceral reminder that I noticed. And let me take us. So now we know the definition. It's just dollars to gold, and here is a screenshot of that part of it. And I can tell you that that number clicked up. You don't see it moving on the live chart, but it did click up from where it was. I think that's all I need the live chart for. I've got an Excel spreadsheet here to do the calculations. And so let's just go ahead and get started. I think I can get rid of that. I don't need that anymore. Okay, so I will pull this back over here. Whoops. Let's get this one. Boy, it really has a lot of trouble, uh, doesn't it? All right, so I'm going to start with this date. Okay, so dollar to gold ratio in 1913. And I'll just go ahead and assume that it's the end of the year. I don't think it matters that much. But a lot of things are end of years, a lot of charts, or end of month rather. A lot of charts are end of month, and end of year makes sense. Uh, Dollar to gold ratio at the end of 1913 would have been 1231, and it would have been 1913. And that is not 2013, that is 1913. You can barely see it there. Of course, you saw me type it in. So the price is going to be, let's just enter all the numbers. Like I said, I've already got the spreadsheet set up for this. This can be, I'd probably get more views calling this a Microsoft Excel tutorial. And it can also be called a tutorial for the, what is this? This came from the website. Oh, good heavens. Did I forget it already? The government website. Debt clock. Debt clock. Got a lot of data on it. Lots of data. So I'm just scratching the surface here. And so that's that. And then this one is today, of course, which is 4 today is 413. And I wanted to leave a space for one I'm going to put in the middle. So I'll explain that in just a second. 413. I think you're going to really find this interesting. I think most people will, anyway. And it is 2020. Okay, and that is 19528. And a couple of minutes ago that was 19527. So it takes a few minutes, and then that number updates as well. It's just not going as fast as the individual dollars is. Okay, so just 19528. I can't see these numbers here, I'm in the dark. Okay, got it. And then what I'm going to do is show you what it was. And this was not that long ago, and it's a little bit of a fuzzy picture, but I guess I didn't, do the little screenshot as good as I could have. But, in November 20th, it was only, and that's that's less than 5 months ago. It's almost 5 months. It was 86.81 per ounce. So let's type that in. That would be 11/20/2019. And what did I say it was? It's in this presentation here. 8681 per ounce. So I remember thinking when I saw that, thinking that eventually I was going to get around to calculating how they come up with 8681. Well, I didn't realize that the number was rising that fast. Because my number that I'm calculating for where gold is going to in this cycle is 62.95. So when I saw that, I thought, the bigger the number, the more comfortable I feel with my number, and I have gold going, and you can see my previous 6 videos. I always bring this graph up. This is a little schematic, and go watch the other videos if you have time, and you can see the pattern, and the pattern is very predictive. I mean, one M pattern, M as in Mary, I call that an M as in Mary. One, and it takes 2 things to predict a third thing, just like it takes 2 points to draw a line through and predict, that one. So the earliest we could have known any of this was 1980, which that actually goes, well, I can't move it. But actually, that's 1980. This is 1974, and each one of those points is predictable. We're just in this point. We're beyond this point now, obviously, but the Dow and gold is really dropping, and it dropped so fast. Well, I did a previous video on that. It dropped so fast that it pulled gold down with it just a little bit, which it's done in both of these crisis legs, if we want to call it. The down legs are where the crisis occur, and this is where the stock market explosion occurs. But anyway, these are all points that are predictable. So go watch the other video. There's 6 of them now, and this is the 7th video. And let's continue on. So I've got this laid out. So what I wanted to show was, that's only 5 months ago, and look where it is now. So let's do some calculations, and here's where it started. So what I'm gonna do is I'm gonna calculate from, let's see, what was I thinking? I was 1913 to 2019 is, now here's the Excel tutorial. If you take that date, which is 11/20/2019 and subtract this date, which is 1913, you get that number, which is the number of days. And so we don't really want days because it's such a big number. Let's convert it to years by dividing by 365. And you can see what I'm doing. So this is an Excel tutorial will get way more than economics views. Not that I care that much about, I care a bit about, part of my ego wants to get a lot of views. Okay, so that's 106, and I've already got years written over there. Okay, so that's that time period. And during that time period, the price of gold went from 28.76 to 86.81. Actually, that's not the price of gold. That is the ratio of the dollars created to the amount of gold that is being pulled out of the ground. So there's that minus that, and that doesn't need any manipulation. So, and then so per year, on a per year basis, over the last 106 years, and just in case we want this number, it's increased 81.66 per year. So it took 106 years for gold to increase. I'll just step through this. It took 106 years for gold to increase $8,652.24. So now let's look at what has happened in the last November to April 5 months. And again, we can, here's 4/13/2020, and we can get that in the, and subtract that. And that'll give us, that's not 145 years. We got to divide by, that's 145 days. So to get it into years, we need to divide by 365. And come on, what did I do? I put the parentheses in, but I didn't divide by 365. Divide by 365. 365. And it's 0.4 years. And let's see. So if I just as a little check, take 0.4 times 12, which is how many months are in a year, and it's nearly 5 months, 4.8 months. So that's right. Okay, just checking. And so the price change is going to be that minus that, and so let's just do this minus this. This is good Excel tutorial, because I didn't know you could do that with the dates. Just subtract a date and it will give you the number of days that are in between them. So whereas before it took 106 years for them to print enough money to be equivalent to $8,652 per ounce for the price of gold, this is just another way of looking at how much money's been printed, and in a measly 0.4 years, just 5 months, they've managed to outdo that. So the point is they're really printing money. right now, and the debt clock is showing it. And the debt clock has so many moving numbers, you almost get numb to it. And this is kind of a, you know, take a snapshot, calm down, and let's see what's really happening. And if I do divide that, well, I can just copy this from here, put it right here. And this number is going to be ridiculous. So, this average was 81.66 per year, uh, that they increased the money supply so that, gold, if you just even it out over 106 years, here we're going at a much higher rate. So, another thing, if it's useful, is to see, in the last 4 months, and this is exponential, parabolic is another word for it. We're 334 times faster creating money than we did on average between 1913 and 2019. I don't know if that's that. I don't know why I erased it either, but I don't know if that's if that shows it. But certainly, when you click on the debt clock, it can be a little overwhelming. Where do I get the debt clock? Let me click on it again. And you see those numbers, and it's almost like you get numb to the fact that they're creating money that fast and the debt's going up that fast and all that stuff. It's just crazy. And if you reduce it down to gold, then you can kind of get a better grasp on it. And then there's, I think it's worth, going through this. They they've got a lot of information on that clock, so I'd go look at it. Just Google U.S. debt clock, and that's all I got for this one. And hopefully that's not too long. Thanks for watching, and good luck trading if that's what you're doing.